The speed of the bond drop is remarkable. Actually, if you look at the current part of the chart of the bonds, today we are hitting a level, and today is December 8th, 2025. We're hitting a level of 3-month low. Now, the significance of this level is the fact that we had 2 rate cuts by Federal Reserve, one in September and one in October. Well, under rate cut conditions, as you know, bonds and yields have the opposite trajectory. So when Federal Reserve cuts rates, well, bonds are supposed to go up. And in the last 3 months, Federal Reserve cuts rate twice, which means bonds should be way the fuck higher, but they're not. And on top of everything, we are now trading under the level where bonds were trading going into September cut. So you get quarter point cut right here, another quarter point cut right here, and bonds are trading under the level of the price where we went into those 2 cuts. Guys, this is absolutely remarkable. So while the market is having you focused on absolute pure garbage, okay, like the potential of a rate cut, QE, they have you focus on Time Warner acquisition, IBM buying another company. Like, none of that, it's just noise. The way you make money in the market is focus on shit that matters. Guys, stop paying attention to every little bullshit article about nothing. This is the chart you focus on now if you want to beat the market. So again, we're at a critical condition. Okay, and there's 2 ways to measurement. One is by level and the typical correlation. So normally bonds are supposed to go higher when rates go lower. That's not the fucking case. Second thing is the speed of the drop. Now, remember when the markets were just dropping in November? Remember, I posted the video on November 12th telling you, hey, the market is about to drop. Guess what was happening in November? Okay, the market, bonds began dropping first. When I noticed that, I posted a video saying, hey, the market is about to drop next. And that's exactly what happened. So as you can see, bonds drop first, then the market drops. Well, y'all know what else was dropping. It's something we predicted before anybody else. Like, it's amazing how everybody's making these bearish Bitcoin videos now. Where were all these fucking clowns, right? Where were all these clowns when Bitcoin was at 120, 126? So what is notable is the speed of the drop, okay? See how fast all of a sudden you were at 91 and before you know you had 88 on bonds? Look at this, 90.5, before you know you're touching 87.5 today. Now, the speed of the drop, okay, and the reason market panicked in April was not because of some bullshit tariffs. It was because of the speed of the drop in bonds. So look at the speed of the drop in bonds. And y'all remember what was happening in April, right? I mean, S&P was dropping 200-300 points a day. During what? What else was taking place? It was the speed of the drop in bonds right here in April that coincides with absolute panic in the markets. And arguably Fed in a secret meeting, they had to step up and buy up these fucking bonds before the entire market collapsed. So when you see an acceleration in the speed of the drop of the bonds, especially when bonds are supposed to be doing exactly the opposite, you know some major shit is about to happen. Now, just a few days ago, guys, okay, in not so distant history, on December 1st, we had a situation, okay, that doesn't happen unless liquidity is completely drying out. Now, you can go Google it yourself, but I mean, this is, you can type in repo rate spike December 1st, and you're gonna see that, hey, there's some wild shit that was happening, okay, because, you know, banks borrow money from the Fed. What they use as a collateral is United States government bonds. And when everybody's trying to do it at the same time, that tells you the money is drying out because they're all trying to borrow money from the Fed overnight within the same time frame. That spikes the rates. This shit should not be happening if the markets are doing well. This is a sign of significant deterioration. Now you take that and you combine with this chart, and I'm telling you, the market is about to collapse the fuck out. While people about talking about Time Warner acquisition, Carvana being admitted to S&P 500, forget all this garbage. The market is about to fall the fuck apart. And what's crazy about this, if we're going to get a couple more days on bonds dropping, we're actually really going to catch up to the speed of the drop that was taking place in April. So when I'm saying, like, look at this again, look at the fucking pattern here, focus. If you want to make millions in the market right now with options, you got to buy a shitload of put options. Let me show you this. Okay, so go to pull up the S&P chart. Now this is a daily chart, 9 months. Okay, look, this drop right here, I mean, this was April. Remember when bonds were collapsing? That's when the market was dropping. And it's not like even bonds moving from 121 to 112 doesn't seem like, hey, what's the big deal? 121 to 112. Well, for bond market, it is huge. It is the speed of the drop that sets the panic. It's the speed of the drop that most of the market participants are never prepared for, because they got their algorithms programmed for a certain range. And when the markets get outside of that range, that's when VIX goes to the moon. Okay, and right now, guys, the VIX is in a super danger level. We're going to glance at that in a second. But, like, look at this. Okay, this was April. And I'm telling you, right now, the market's trading within the percentage point of all-time highs. And this shit could collapse the fuck out at any given moment. And what better moment could it be? Well, this Wednesday, Thursday, okay, we're going to get a rate cut, which should do what to bonds? Bonds should go up, but I'm telling you, based on this chart, of TLT, bonds are going to drop even more, because this is a perfect head and shoulder formation. Here's your shoulder one, here's your head where there's no volume at the top while the top is forming. Here's your other shoulder. We're about to close every gap. So today we just closed this gap up that was created back in September. We're about to close this gap up, which is going to put us at 86. And at level of 86, we're not very far off from where bonds were trading in April. Okay, in April, the low was 82.5, and that's when Trump had to call Federal Reserve in a fucking meeting in a closed door room and said, hey, we got to save the bond market. That's when he came out on April 9th and made the announcement that, hey, April 9th, 10th, whatever day that was, he said, hey, it's time to buy the stock market, because he already knew he made a deal with the Fed that they're going to save the bond market. That's why the market reversed. But the point is, since then, the case for bond market crash is like 10 times high because of what? The big beautiful ass bill, because of the fact that every country outside the United States is making deals between themselves and excluding the United States. The fact that yesterday's report from China shows China's surplus with the United States is at record level, which means despite of all the attempts to launch the local production in the United States, none of that shit is working, and the United States officially is now more dependent upon China than ever before in the history, because that trade deficit grows. Now, the goal of tariffs, okay, remember the big story, March, April, oh, tariffs. Well, the goal of tariffs were supposed to do what? To cut down the trade deficit. Well, based off yesterday's number, okay, the trade deficit actually just shot up to all-time motherfucking highs. Okay? So the bond market is about to do what it did in April. And none of the goofballs on public television, none of them are actually talking about this. Now, if we're to throw the fact that, okay, silver for the first time is trading at the same level, or they were in the last few trading days, silver was actually at moments trading above oil price. The last time that happened was in 1970s, which was the most severe case of stagflation. Guys, this shit is serious, okay? Stagflation is a situation where inflation is running higher, despite of all these garbage economic reports that the fucking media is feeding you. All of that is a lie. The prices are going higher. You go to a store, you know prices are higher, insurance is high, everything is high, and somehow inflation is lower. You gotta be a complete fucking idiot. So basically, the chart of silver and the chart of gold is telling us we're in a severe case of stagflation. Okay, bonds don't do well in stagflation. If anybody tells you bonds are a good defense strategy or they're not going to drop as much in case of inflation, which is, by the way, part of stagflation is inflation. Okay, prices are fucking going higher. Okay, bonds is the last thing you want to hold because they don't protect you against inflation. Guys, this is a dire circumstance, okay? And the fact is, everybody's expecting QE. They literally, look at where the fuck the market is at. You really think there is a big QE that's going to hit the markets when the markets are trading at all-time highs, like 1% of all-time highs? There's never been an instance. Okay, now there's been 4 or 5 instances when Federal Reserve actually cut rates at all-time highs, which is why the probability of this Wednesday cut is actually pretty good. But there's never been an instance where Federal Reserve implements crazy QE, because Fed only implements QE when regular monetary instruments like lowering interest rates are not effective, which, guess what? Even if Fed cuts quarter point, anybody's looking for a mortgage, that's not going to make a drop of difference. That ain't going to save the housing market. It ain't going to save the automotive market. That ain't going to do shit. So the market will absolutely crash. When the market crashes, that's when the Federal Reserve is going to be implementing QE. So now, everybody's got it absolutely wrong right now because they're thinking, okay, Federal Reserve is going to cut the rates, the market's going to go even higher, Federal Reserve is going to begin implementing QE, and that's why the market's going to go higher. Okay, Federal Reserve is going to cut rates, the market is going to collapse, and that's when Federal Reserve is going to implement QE. So whoever's hoping for a fucking market bounce right now, or the Santa rally, or the Christmas rally, or Happy New Year rally, I mean, they're going to get fucked. Guys, this is one of the greatest times to short the market because everybody's focused on absolute bullshit, okay? Like, you should be shorting the hell out of the market. And the greatest thing to short, guys, is not even the S&P 500. What everybody's wrong about is the Russell 2000. They think of the great broadening of the market. I'm saying you got to short the fuck out of this now. It is the Russell 2000 that's going to drop back to the April lows. So you're looking for a drop from 251 today to a drop of like 170s, which could take place in a matter of 2 weeks. Because everybody's got this fucking trade wrong. You're telling me that the weakest companies, okay, that actually have borrowed money, are going to benefit from the slowing economy and high inflation just because Federal Reserve is going to cut interest rates by a quarter point? Are you out of your fucking mind? So guys, you want to make big money? Puts. You buy a shit load of puts. But you got to know what to buy, what strike to buy. You got to make sure you don't jump out of trades on bounces, guys. 50 to 100x trades are possible with the information I just disclosed to you. But I guarantee you, most of you don't even know the ticker for trading bond futures with options. So you need to get in touch with the 13 Market Moves coach today. Don't miss those 50x, 100x trades, guys. QE, okay, or the idea of QE at the market top is the very fact that actually is going to crash the market before real QE will be injected into the system. So markets are 100% delusional right now. And I cannot think of a better time to go big on big time shorts right fucking now. December 8th. Let's roll.